This is Aaron Levine, LG Insurance Agency, also known as the Luxury Group, hanging out with my friend Brian Adams on another episode of the Who You Work With Matters podcast. Brian and I met on LinkedIn, so I guess we have to talk about some LinkedIn strategy. My friend John Valentini from AltFest commented, I guess, on a post that you made, or you guys are connected somewhere along the way. And then we connected, and you invited me to be a guest on a panel that you were hosting for your podcast, the Mack Podcast, which went into collections, collectibles, risk management. And I got a watch lesson that I've never had before in my life. I still haven't gone shopping for a new timepiece to wear, or a new art piece, I guess, to wear on my wrist. But when I do, I'm gonna hit up one of those guys that you had me join with, because it was a phenomenal conversation. I really appreciate it, and I just wanted to give you a moment to jump on my show and introduce you to my audience and be able to share a little bit more about your story, about what it is that you do. And your bio is huge. We're not going to get into all of it, but tell me a little bit about who you are and what your focus is.
Yeah, thank you again for having me. And the panel was a lot of fun, so we can get into some of that, but it was great. Appreciate you joining. My day job, I'm a executive recruiter. So we do retained search work for single family offices. We work across the country. So I live in Nashville, Tennessee, but we cover the whole US. Everything from first generation, newly created first hires for a de novo family office, all the way through larger multi-generational family offices and everything in between. Linda Mack, the founder, started the business 24 years ago out of Chicago and is a legend in the space. Really started family office before that was a term that people used.
Right.
And so we're very small, niche, independent group, very focused and very broad and deep in that family office ecosystem.
Love how you say that's your day job. You have quite a bit more that you're doing. So did you start the Mac podcast, or did Linda start the podcast
No.
and then pass it over to you?
Linda did not start. She's not much, although she's a great guest. But
Okay.
yeah, so that was something I did back when I was a real estate investor for a long time. And then I ported it over with me when I joined Linda about 4 years ago. So existing show, we rebranded it under the Mac umbrella, reoriented towards being very specifically focused on that ultra high net worth family office world, and learned a lot of lessons from doing kind of 400 plus episodes under the old brand. And I've really tried to do some different things. Kind of the panels is one of them, learning from our mistakes early on. But yeah, the show's been great. It's been a lot of fun. I think we're over 400, 500 episodes or something at this point. So
that's a phenomenal number. I think I'm at 100, and I think you're going to be 110 for me.
So yeah, but I think if you do 100, you're like a top 1% podcaster, something.
That's what I tell everybody. Yeah. Everyone's like, "Oh, I want to start a podcast." I'm like, unless you're going to commit to 50, right?
Yeah.
That's the number I throw out, is that 50 number. Unless you're going to commit to 50, don't even bother starting, because most people don't get past 5.
Yeah, the average show I think is 7 or 8 episodes, and yeah, I'd have very similar advice to people of, it's great, but you've got to commit, and you can't miss your publishing date, and it's going to feel like you're just screaming into the void for a long time. So we really got to be into it.
Look at all the top podcasts, and you say, "Oh, how do they have millions of views, right? Followers and subscribers." But then you look at the number of episodes that they have. Thousands and tens of thousands of recordings, of videos, of episodes to gain that traction. It's not a one and done. It's such a longevity, a long time game. It's hard to stay consistent, right? And it's hard to stay interested if you're going to just look at the data. You can't look at the data. You have to look at every other metric out there, because I learn so much every time I do a show, whether I'm a guest or I'm a host. Like, there's so much to learn, so much to gain, so much to grow with personally, that I take it from that aspect, right? There's so much more to it than just the metrics on YouTube or Spotify.
It's a long ball game, big time. Yeah.
But even one of my old college buddies, he's like a podcast professional, and he posted a statistic. I think he said there's like 30 million podcasts out there in the universe, right? And you just threw out like that to get to 100, you're in that, top 1% of it. There's still a lot of content being put out there on the web. There's a lot of noise, and it's just a matter of finding your people, as a podcaster, to find your one person that's going to connect and potentially make a difference in your life, or that one person that you're going to make a difference in their life. Right? That's all it is.
Yeah, 100%.
So how did you get into podcasting? What made you want to start, and what motivates you to keep it going?
Yeah, I think like a lot of people, COVID, I found myself with a lot of time in my hands, stuck at home, and had been, at that time I was in the business development world, raising capital, and had historically done a lot of networking, and all of a sudden couldn't do any of those things, and
Right.
decided, well, I can start this show. And gosh, that was probably 2020, right? So
Mm-hmm.
6 years ago ish. And just really enjoyed it. I think I'm also pretty stubborn. And so I just decided to keep doing it and keep going, and I have a tendency to overdo things. So started doing a lot. I thought it was a great medium and platform. And what I've really enjoyed about it is the efficiency of content creation. So you can do one show, 20, 30 minutes of airtime. And you can, especially now with AI transcription services, you can create a blog, a newsletter, certainly micro content for video clipping. You can go on YouTube or LinkedIn or Instagram, depending on what platform you want to focus on, or all of them. And you can really knock it all out with one session now.
Mm-hmm.
So it's very efficient. And the thing that I've really enjoyed about it is kind of how we connected here. You think about, okay, well, I try to crowdsource my panelists. So every time I have an idea of what I want to do a show around, I throw it up on LinkedIn and I say, who should I have on the show? And mine was about collectibles, right?
Mm-hmm.
Somebody tags you, I follow up, you come on the show, you were great. Now I'm coming on your show. It's just this great way to build the network without having to necessarily get the warm introduction.
Right.
And so I just really enjoy it. I find it very expansive. And within the family office world itself, I mean, frankly, my competition is pretty low. There's not a lot of great people out there doing killer shows in the family office space. So I can differentiate myself without having to, put forth a huge amount of effort, frankly. And I think there's just something intimate about being in somebody's ear. You feel like you know them. And so you do have to think about it as a top of the funnel exercise, because you never know what's going to trigger somebody from calling you and picking up the phone. But the show's been great. I mean, I tell people my audience is kind of an inch wide, mile deep, but I get tons of anecdotal feedback about people that listen to the show, they like the show, they heard a friend on it, et cetera, et cetera. So I've really enjoyed it. And I continue to just keep pushing.
Yeah, no, I love that. I love that how you crowdsource for different guest ideas, and that's one thing about this podcasting community. Not meaning to turn this whole episode into about podcasting. You know, everybody that hosts a podcast, we all want guests. We all want to be guests. The sharing community within the podcasting space is phenomenal. I've met some amazing people across the country, doing shows back and forth and having great conversations. I love to be in studio, right? We record in a great studio here in Red Bank, New Jersey called Rec Productions when I have local guests, because I love doing nonprofits. I love local business owners, right? I love that community feel, that community give back also. But thank goodness for this Riverside platform to be able to record, this, which makes it feel like we're sitting right next to each other or right across from each other. But the technology makes it so easy. And then again, like you said about those micro clips, like the AI in Riverside is going to do 95% of the work. I just have to get my team to do the posting and do the review stuff. But it makes it so easy to get the content back out into the public view. It's a lot of fun. So I'm glad you keep podcasting. I'm glad you keep putting great shows together. I think I jumped in on another one of your panel shows that to listen into. Somewhere there was another panel show that you did about collections, but more in the art world that I listened to, that I enjoyed. So you have a lot of great shows and a lot of great content out there. So for anybody interested in learning more about the investment and the family office space, going over to the Mac podcast, there's so much content there that you can spend days in the car driving around listening to podcasts, and really getting a great insight on, the different verticals that exist within the family office space is what I've learned a lot of. And then, funny enough, I had one of my friends in the insurance space knows that we do a lot in the high value personal lines as well as in the enterprise business space for insurance. So like, we have an opportunity with a family office. How do we do it? Right.
Yeah.
I'm like, well, it's all about one, it's your relationship and how can you nurture that relationship, right? And where are you with that relationship, right? What level are you on with the relationship? Who's leading the relationship? Is it the legal team, the accounting team, or is it, somebody at the top that wants you to become their agent? And then how do you then manage risk before you worry about what the price is going to be? As opposed to everybody else that calls in to buy homeowners on a house that's a couple $1,000,000, it's like, okay, what's the price, right? It's a different conversation of let's manage some risk and then figure out how much more risk the group wants to take with respect to the premium. Because I have clients that take on big risk with insurance and don't care about property, they only care about liability, and others want to be fully insured, right? So it kind of goes, everybody's got a little bit of a different personality when it comes to their personal risk management. So when you got into the recruiting space, right? You were in real estate investing. How did you
Mhm.
go from real estate investing over to recruiting, especially what I would call at this highest level for the family office space?
Yeah, I mean, I think like a lot of people who come to search in the second half of their career, they just kind of by accident. So I'd been doing real estate for 12 years. For people that know that space, I was a fundless sponsor. So I was syndicating capital on a deal by deal basis, had a GP platform that I started with a friend. And I guess a couple things. One, I mean, I've been doing it 12 years and needed a change. Two, I thought there were some structural challenges coming for the industry that didn't want to kind of fight through. And then I turned 40 and I just wanted a different chapter. And so my wife's family has a family office here in Nashville. So I'd always been adjacent and kind of on the outskirts of that industry through my wife's family and some of the communities that I was a part of.
Mm-hmm.
Um, and then through a series of serendipitous connections and conversations and introductions through a lot of my YPO network, I got put back in touch with Linda, who I'd known, tangentially, but didn't really know her directly. And she was looking to bring in a successor, somebody to help lead the firm moving forward. I was looking for something different. It's interesting. She was looking for a very particular skill set. It's kind of like the cobbler's children. Recruiters for independent boutiques are notoriously bad about finding successors for their business. She was looking for somebody specifically that did not have a recruiting background because she wanted to teach this person the idiosyncratic nature of how we do search, which is different than a lot of people. And everything lined up, and the deal came together very quickly, and it's been great. But yeah, serendipitous, accidental. Never thought I would be in search. Didn't even really know what the industry was, to be frank, until
Right.
5 years ago.
That's so funny. I use a search firm to help me. Like I'm not on indeed.com hiring my own people, right? There's better people out there to do things. And that's one thing I'm very good at is hiring and knowing the right people, right? The right people to me are all who's, hence why we branded the show, the Who You Work With Matters podcast, because, hiring the right person to do the right job is going to do better for me and make it more profitable. Even though it's going to cost me money, it's going to be way more profitable at the end of the day to have the right people doing the work.
Yeah, the time is the challenge. It's, how much is your time worth relative to having a third party kind of run a professional process?
Right.
It's given
Time
me a
and the
big
knowledge
appreciation.
base,
Yeah.
knowledge base and your connections, right? You're connected to another degree right now than you may have been when you started with Mack International. But there's so much value in that knowledge, and the network that already exists is tremendous, and that needs to be valued. And everyone's like, oh, AI is going to change everything, and AI is not going to change the relationship business. I didn't use AI to generate any questions or do anything for our conversation here. This is just, us doing what we do really well and enjoy doing, right? I don't need AI for that. I don't need AI to tell me how to, run my business or how to do risk management. Yeah, there's tasks that we can use AI for. Um, and there's different things that we're going to be able to take off of our plate because of it. But the knowledge base, the network, and that skill set are going to be far too difficult for a technology to replace us. So tell me, why don't we go into, as I'm looking at your bio here, you have a couple of different things in here. You have the Fortaleza network, and you have Somos 22. Which one do you want to talk about first?
Yeah, I mean, we can just kind of go with Somos because that's really the platform that
Okay,
Fortaleza nests within.
got it.
And to to go into the why do this kind of question, I found after doing search, 'cause to your point, Linda's created this incredible business where we have just unbelievable reach and depth in the family office community, especially with third party professional managers. So
Hmm.
in the industry, there's principals who are the folks who are the family members that run the family office or who are the direct clients. There's the family clients, and then there's the professional managers, the non-family members, the in YPO parlance, the hired guns who come in and serve those principals and family members.
Hmm.
We had huge connectivity there, and I would do these calls. I mean, I in recruiting, I do, gosh, 10 or 20 calls, Zooms a day. Um, and you would ask, well, what can I do to help you? And pretty much uniformly, everyone would say, well, I want to meet other people who have the same problems and opportunities that I do, peers, like true peers.
Hmm.
And I think a big challenge in the industry has been that one, these events have been cannibalized. And so there's really not a lot of true family office professionals that go to a lot of the industry events because they get pitched and it's just not a great use of their time. Two, a trend that I've seen, kind of to your point about technology and AI and relationship, I think content can be accessed asynchronously. We can listen to this podcast in the middle of the night, flying from here to wherever. We don't have to do it live.
Hmm.
And so I think content was degrading in terms of the value. And a lot of those conferences and events were around content delivery. The other component is these families are on the buy side, right? If they want a manager or somebody to come in, like me or you, like we're going to go schlep to where they are. Like that's just how this industry works. And
Right.
we're happy to do it. So it wasn't really a need of finding these people. And what they wanted was true safe harbor peer to peer connectivity. And so, because of our database and our network and our relationships, we were able to deliver that true peer to peer experience share in a safe harbor setting. And so, we started doing these events ad hoc about a year and a half ago, and it's since matured and progressed and really grown tremendously. Where it's really its own business at this point, where we put on events across the country. We have about 3,000 family office professionals that have opted into our community. And I think last year I made 1,200 family office to family office introductions
Well, neat.
over email. So it's really grown, and it's just solving this problem that we see in the market. And it's been a lot of fun. It continues to grow. It's keeping us very busy. And it's also obviously good for the search business, continues to expand my reach and connection in that world. So it's all kind of synergistic with what I do on a everyday basis.
And so how do you fit into there, right? So if I were to say, how do vendors, I guess, fit into that mix, right? Because there's a need for legal and accounting and risk management and the art appraisers of the world and the watch guys. How do you fit all of the vendors into this network? Because there's obviously a need. There's probably a way for sponsorship and hosting and all of that stuff to offset some of the cost for events.
Yeah, we definitely have partners and co-hosts and people that we bring in to defray our overhead costs. We're very thoughtful about who we do that with because we don't want people soliciting. We want people to be kind of good actors.
Hmm.
Um, So we've started introducing that and it's gone well. What we use is a YPO protocol of the need has to come before the lead. So somebody has to say, I really have this need of the, high end watch insurance person. I say, well, then you should talk to Aaron. I'll make an intro, as opposed to you just saying, hey, let me tell you what I do. And so we have a lot of norms around the community that we borrowed from Tiger and YPO that we know are efficient and effective. And so it's gone pretty well. I mean, you always have to be really thoughtful and monitor everything carefully, but there's just this huge appetite for these people to meet each other.
Mm-hmm.
And so as long as you have the right partners, it goes pretty smoothly. So it's worked well.
So have you seen, right, the family office space continue to grow, as you've been in this working in this space for 6 years, but you said you've also married into family office environment, more or less. Have you seen the space continue to grow over the past couple of years?
Yeah, it's unbelievable. I mean, I think for a whole host of reasons that we can get into or not, but it's grown tremendously. And I think we're still really early innings on it. And, just like I said, 10 or 20 phone calls a day that I have, I always think, gosh, there can't be more people out there. And every day I meet probably 2 or 3 new family offices every day.
Wow.
And there's just really no end to it. And then this new family office creation that's going on. And then the transition with these kind of larger multi-generational families that are undergoing succession and leadership change is introducing a whole new cohort of professionals into the space. And it's in my mind, it's its own independent, mature asset class or industry relative to private equity or venture or traditional wealth management or asset management. And it will continue to be, I think.
I work with a couple of vendors of mine. One in my premium finance space. So a lot of the policies that we write need to be financed through a third party. Our main vendor is owned by a single family and has been for the last 30 years. Right. And I think the revenue just on this single entity for them is close to $2 billion a year. And they have other entities owned by them. And then I also found out recently that there's a large network in the insurance space that is also owned by family office. So it's cool to see, that the enterprise side of family office, not just thinking.
Would that be a family based in Texas by any chance?
It very well could be.
Yeah, yeah, yeah.
I think that one is headquartered in Texas. The other one is in Missouri.
Yep.
But it's cool to see the enterprise side of the family office, doing real business with businesses that we interact with. You don't really necessarily think that when you think family office, you just think they're buying art and, investing in the stock market. But there's actual really good businesses that are put to work out there to continue to grow and then provide benefit for, networks of businesses and individuals and consumers alike.
Yeah, I mean, I think one of the misconceptions I had before getting into the space was I was really convinced the public markets ran the world.
Mm-hmm.
And now I'm very, very much convinced that private markets, family controlled businesses are the ones who actually run the world. And will continue to do so in my mind, even if the IPO window opens up and more M&A activity occurs. I think you'll see more and more embedded family offices, or what we refer to as founders offices, which are folks that run private companies pre-liquidity event that still want to have somebody be their fiduciary and sit above the balance sheet of the operating company and their personal affairs and help them be that strategic thought partner. That's why I think it's still very early in the family office space.
You see family offices then competing with private equity in the M&A space.
Yeah. Yeah, I think the next cycle of capital formation will be family to family co-investment, syndication, club deals, direct cap table investing, where they don't necessarily have to have the friction costs or the intermediation of a sponsor or a traditional GP necessarily. I think that will change pretty dramatically. And you're seeing that kind of play out in real time with some of these secondary transactions of SpaceX and Databricks and some of these groups where they stay private very long, but they're mature enough where they have liquidity windows and there's really a little bit more transparency in pricing. And families, I think, will continue to be attracted to those type of opportunities, especially if they have, to your point earlier, if they have subject matter expertise and they can create true alpha because they know an industry or an area really well and can lead those type of deals. Like families want to invest with other families, and I think that's what you'll start to see more and more of moving forward.
It creates an interesting dynamic, right, for the acquired entity to go be purchased by family office as opposed to being purchased by private equity, right? The lender, the debt load looks totally different. The balance sheet looks different. We're not in a rush for a 3 to 5 year turn on it. It could create some longevity and create a whole different story with respect to some of the M&A activity out there.
Yeah, 100%. I think people have realized that, you know, equity drives incentives and incentives drives behavior. And, these families have more flexibility just because of how they're structured and their capitalization. They're not beholden to a timeline or a time frame or these other stakeholders that might not be directly aligned with what the sponsor, the management team, or the operating company wants ultimately. And so it makes a lot of sense for them, not always, but in many cases for them to go do it. And these families now have big balance sheets where they compete directly. And so I think you'll see more and more of this, which is really just a return to what things were like post industrial revolution, frankly, where, private investors were really the ones who drove GDP in a lot of ways.
Mm-hmm. I love that. What's next on the list for you? I mean, you're constantly moving between the podcast and the network and Somos 22 and helping family offices grow and recruit and get bigger. What's next on your list?
I mean, it's a great question. I think I've got enough going on my plate. I just love being able to help people, and I do really think of myself more as like a bespoke consultant. Human capital is a solution that I can bring, but I just love making introductions and helping people. And it's a really fun industry to be a part of right now. It's growing, it's dynamic. And so, I think continue doing what I'm doing, keep doing the podcast. Hopefully that'll be good. More panels. The panels do really well. I really enjoy them. So hoping to do more and more panels moving forward as well.
I love that. I love live. I've moderated a live panel a couple of weeks back for an industrial real estate event. Being live in those rooms is so much fun, and
Yeah.
getting to, whether it's host or be a part of, they're never ending, right? So if I was to give some advice out, is just to continue to share, because that's what you do. You've been sharing for years and continue to do so and continue to bring people together, right? That's one of your gifts. Like, that to me is your superpower, because you give so much before you send an invoice out for a recruiting deal, right?
Yeah.
For a search deal, and I think that's important for anybody coming up in business. Anybody that wants to get into any space, anybody that wants to get into the family office space, and be a provider, like you said, you're going to reach out. You're not going to, there has to be a need before the lead, I think is a very cool phrase. I don't think I've ever heard that before. It's a very simple phrase, but I think that's important, right? To be available to make the appropriate connections, and be available to be connected to, and just become an expert in your space, I think is super important. And you've definitely proven that. And if I ever get to Nashville, I'm going to have to look you up. And
Yeah, please. We would love to host you. Be fun.
come for a cup of coffee and
Yeah.
and pick your brain some more. Is there anything else you wanna leave us with?
No, I just thank you for the opportunity. Like you said, the podcast community is so much fun. I do a lot of swapping, right? Where kind of come on and then be a host and a guest. So thanks for all the work that you do. The panel was terrific. So no, thank you for hosting me. And if I can be helpful to anyone, hit me up on LinkedIn. I'm on there way too much and I will respond. So always happy to be a resource for folks in the world.
You are definitely responsive, and listen, when I say what my differentiator is in business and for my office, is we pick up the phone, right? it doesn't take much. It just takes a little bit of communication, and sometimes over communication and oversharing. But that's what creates success for you and for me as well. And again, I thank you for being a guest on the podcast, and I'll look forward to connecting with you again soon.
Awesome. Thanks, Aaron. Appreciate it.
All right, where's the